Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey, what's up everybody? Sorry it's been forever. It's nice to be back. Once again, have technical issues with this stupid thing. I'm sorry, I hope my mic is working well. If you can hear me, if you're in the stream, please let me know. If not, I don't know what to do here. My mic, my actual mic, I think it broke. I think it's at the end. I had one of these snowballs, which, you know, I don't even know how long I've had it. Years. I've had it for years. So I guess I got my money out of it. It wasn't really expensive from what I remember, but I'm using the mic on my camera, and my camera is not very good. So I hope everyone can hear me okay. I am truly sorry if it doesn't sound all that good. But I'm gonna keep this stream pretty short tonight. I wanted to do a stream just because it's been a while, and I've been probably working harder than I've ever worked, and I just know no one gets to see it because I'm not on here. But it's been a month. Baby's doing well. Family's good. Things are good. Just busy. It's very busy. Back to work, everything like that. So it's just everything on top of all of it. So oh, cool. Hey, how you doing, man? Miss you. It's good to be back. Yeah, so I don't know. I mean, if this camera sounds fine, maybe I don't need to get a microphone and I can just use my camera. So, but yeah, I don't know. When I first went to get on too, my camera wasn't working either, and I was like, oh my gosh. I was like, I'm like, I know it's been like a few weeks here, but Jesus. I don't know. It was just because it was sitting. I was plugging into different USBs trying to get the stupid thing to work. But either way, got the camera working. So that part's good. So I'm back. I've been really delving into swing trading. I know I had started more on the deep and value investment style of things, and don't get me wrong, the best thing about having a background in value and in fundamentals is that it really helps you in your decision choices. I've done a ton of back testing, and I can tell you right now that even in the shorter swing moves, yes, a lot of it's narrative based, but the ones that have legs to it, the ones that are going to run for a while, it's all because of fundamentals. Now, the thing that kind of drives me nuts is the market really cares much more about revenues than earnings, which kind of sucks, you know, in cash flow, for instance. And I think the reason why is because when you're buying stocks at, like, you know, 52-week highs and stuff like that, which a lot of the stuff I am, it's close to, or it's, you know, I mean, no matter what, it's up. And that's very different from how I was doing things before, but it's definitely a way to be consistent, and that's the thing is when you're swing trading, you need to be as consistent as possible, because even though you're setting really tight stop losses, I set mine, so usually I risk less than 0.5% on any trade. That's usually my risk. Now sometimes I get screwed. Yesterday I bought into a stock that was a really fast mover, and I literally bought, I don't know what I was doing. I was looking at something else, and I turned back and looked, and I was already down like 10% because it had dropped so much. And it came back in the day, but either way, that was just me being stupid. you have to set the stop loss immediately. There might be a way. I got to check my broker and see if there's a way I can set the stop loss like at the same time I place the order. I don't know if it'll let me do it, but if it does, that would be super helpful. But either way, keeping the stop losses tight, because I've played around with the math like a million times now, and the real thing is the returns on this when you're doing it properly are huge. I mean, you can really make some serious cash doing this, but you have to be very strict. You have to make sure your stop losses are in place. You have to lock in gains, and then you have to sell into strength, and you have to follow a bunch of rules that allow you to basically, you lock in some gains up front, but then any stock that can have lags to it, you let those run. So it's kind of a balanced strategy of not having too tight of a stop loss, because you'll get stopped off too often and you won't get into enough positions. But you also have to lock in some gains up front to offset some of those, and just to kind of slowly snowball in the right direction. And then the real big winners are going to be the ones that have lags to it. And the reason why it's important is it actually kind of flip-flops the style of how I had been looking at things before. So historically, you look at the fundamentals, I read through the narrative, I go through all this stuff to try and find which stock looks like it's going to do well. Now that does work, don't get me wrong, I do appreciate that strategy, but I think if you're a long-term investor, that way makes more sense. If you're a shorter-term investor, which is really what we were trying to do on the stream and trying to have faster returns, you can use options and stuff like that, but to be honest, I'm not taking that kind of risk on. And it's, I don't know. I mean, Arcade pulled it off with options, so maybe there's something to be said there. But I think for instance, if GameStop hadn't worked out for Arcade, that could have been it, for the stream and everything right there and then. Who knows? The guy had obviously been successful before, but my point being is that what you really want to do is you want to follow charts in this style, and when something breaks out, you want to get into the position. Then actually you want to start checking into the fundamentals of things. And the reason why I say that is when I'm screening for things, I'm already screening for things in such a way that the fundamentals can only be so poor. And it allows you also, though, to look at things where fundamentals might not matter, because there's a ton of times where fundamentals don't drive the stock just yet. It's narrative based, doesn't even have earnings. We used to look at so many value stocks, and I'd go through and I'd be like, oh man, that one popped, I wonder why that one popped. And a lot of times you can just see it. It's literally because of supply and demand. I mean, that's the one thing you realize as you really delve into technical analysis, that it's about supply and demand. It's about recognizing why that demand causes the increase in price, understanding moving averages, and understanding volume. If you can really work on those things, which I'm working on, I'm not saying I'm perfect at any of this stuff yet. Trust me, I've made a ton of mistakes, and it's a really up and down process. But I feel like over time, I'm getting more confident with my picks. Today was a really good day for me. Yesterday was not a good day for me. Now, yesterday wouldn't have been as bad if I wouldn't have had that stupid thing I missed on my stop loss, because I made a 10% stop on one of my positions. It's almost a percent loss of the overall portfolio, which that's why you keep these things tight, because I can take 1 or 2, maybe even 3 trades a day. Today I took like 4 or 5 because everything looked like it was moving to me. And I just, you'll see, I'll show you the breakouts and stuff that I saw and made me interested in the stocks that I bought today. But you have the right amount of volume. I tend to not buy anything now if it's sub $1. And the reason why is, don't get me wrong, I don't care if it's a penny stock, but the real reason I'm not buying stuff sub $1 is just because then I'm dealing with compliance issues. Now, if it does bounce up from compliance issues, I'll catch it on its next move. Because that's the other big thing that you'll learn in swing trading. In order to really find and be consistent with your setups, it's really tough to call stuff off the very bottoms. It's tough to do even when you're fundamental analysis and you're going and you're averaging down. You don't average down really in this style. It's kind of counterintuitive to why you would be doing what you're doing with momentum. But you basically let the stock pop once, and then you wait for the consolidation of the pullback phase, and that's where you get interested again. Now, sometimes that's a few days, sometimes that's a few weeks, sometimes it's a few months. It depends on the chart. You have to look at different time frames. I've learned a lot from Kolamaji, Stockby, Pradeep, Minervi. I've been reading his stuff. Zanger, all the guys who are really phenomenal swing traders, they all, and a lot of them say the same stuff. And it's funny too, because all of them are successful because they look at the fundamentals. I swear every swing trader that's really successful looks at the fundamentals. So having the background in it to me has made this seem much more plausible. So the more exciting thing though is that I feel like as I'm going, I'm making better choices. I'm getting better entrances. That's another thing that you really have to work on, is getting into the stock at the right time. That way, if you're getting into it too late in the day, your chance of getting stop loss goes up. And the more you get stop lossed out, it's just slow. It's not, it's tough to do this strategy without really kind of having some alerts and stuff. And you got to be kind of quick to get into your positions. Now, if something's really moving, I mean, it's exciting because, it sounds crazy because this isn't how I used to be, but you kind of want the stock to be like moving up. Like, it's almost like, let's say I was going to buy and I wanted to buy, like, let's say $10, and I put an order in for, let's say, $10.10. And right when I go to buy, it's already $10.15. And I go to buy again, I'm like, okay, change it to 15, and now it's at 10.20. Normally that used to piss me off. That used to be like, oh my God, that's the worst. Now I'm like, oh my God, get in right now, because when a stock is flying up like that, the chance of it going well up and above where you bought in and then not getting stopped out that day, it's a good thing. That can bite you in the ass too, like I said, because on Monday it was ACRS, which ended up ending the day. I think it was ACRS. It ended the day up, and the chart had pulled back or had returned. I'm talking about this. I can just pull this up. Let's go to so this is the hourly chart here, and somewhere in here is where it broke out from the high here, this like $2 some range. I don't even honestly remember exactly where I got in, but I got in, and of course it pulled all the way back down. Now you want to be looking at the morning highs. So this is today, but the idea would be that this is your opening range high here, the top of this candle. So if it breaks out above that, this is where you would enter, and then this will be your stop loss for the day. Now this one you'd actually get stop lossed out here. So this one today, this was I didn't do this today, and once again it popped today, so this would have been a great one. And you can see, like I said, you can see on the daily chart. I mean, this is the momentum move that you're looking for. And same idea, we've talked about it a bunch of times. Here's your consolidation phase. Now this is the one I said you'd probably miss. Now I would argue that from some of my research that if you have this long, this is the year, right? You have this long area here where that's your support range. If it does break through that, you could probably buy on this, and you could probably buy right there if it actually breaks through these numbers. And you want to be really slightly above any of the actual highs or closes for the day. I don't care if the high was like 151. You don't really worry about that, because those people probably got stopped out or sold somewhere after that point because it was an immediate loss for them. Don't get me wrong, I'm sure some nut job held that the entire time and just cashed in and rode this thing up, for a 3-bagger. But either way, the reason why you're doing that is, number one, you're looking for the volume here, but this volume on this means that no one's in the stock at this price, which means anyone selling at this point is just trying to get out because they're making a profit. I mean, if you've owned it anywhere in this past period, this is all profit to you. Now, don't get me wrong, I can see from where these moving averages are coming from that this probably dropped before this 1 year chart. But if you stick to the 1 year, I do go up to 1.5, and I have looked at 2 years occasionally, but I don't see much correlation at 2 years. But anyways, if it breaks through this point here, it's just buyers. We're all in here just buying at this point, and that's why you see this kind of like, there's just no one selling. Everybody in here is just interested in buying the stock. Now there's a little bit of a pullback here. So on this day, that's the thing. If you get in too late on the day, like let's say you bought, somewhere up here, you could get stopped out your next day. So that part kind of stinks, and that's why it's important to kind of keep an eye on things and try to set price alerts and whatnot to get in somewhere in here. And yeah, you could have rode this up. So I will say, one exception to the getting in on the second leg of a move is probably this one. It's just been flat this entire time. Now, one thing that's tough to see at first, where if you're not used to really using technical analysis, is the charts don't ever look perfect. It's not like the patterns are ever perfect. They're just kind of like general ideas of what things should look like. Anyways, so once again, really tight consolidation range here, and the stock just moves for almost 2 months without doing anything. It starts to break out here. Now, hopefully, the idea is I'm working on building my screeners and things like that. Now, this one, it would be tough. Honestly, even getting in on this first day, unless you literally just had pulled it up, saw it, and decided to buy that breakout, you couldn't really screen for this because it's not up. I mean, it's, compared to the 1 year high, well, I guess on a 1 year, it's up almost 50%, but that's not going to hit my list. My list, I'm looking at, you know, the top 1 or 2% of stocks that are moving. You know, if you think about it, like let's just say on average the NASDAQ has around, it's got around 4,000 stocks, but if we just round it up and say there's 5,000 stocks, I'm looking at the top 50 to maybe 100 stocks that are moving in any given time period, whether that's the 1 month, 3 month, 6 month, 1 year, and then 18 month. Now, don't get me wrong, this will break out and all of a sudden it'll start appearing on all my screeners because of this breakout here. But that's where you would wait for the consolidation. So if you happen to notice this stock on the day that it's moving and you caught it on this move, I would argue that that's a pretty safe entrance, just because as soon as it starts breaking above this price level, like I said, there's no one that's not selling for profit here. So usually they're quick to sell and the price just goes up because the demand is there and there's, you know, there's little supply essentially. And you got day traders that pump shit, and that's why I said you gotta be careful, because the day traders will push stuff way above what it needs to be, and then they're all gonna sell out because they're just looking for like a 1 day profit. As a swing trader, you're not looking for that. You're looking for this. You're trying to capture this entire range here. With that being said, so let's just delete all this stuff here. So now this isn't much of a consolidation, and it's a really steep pullback here. But this would be my pullback phase essentially that I would look for on this. And once again, just the new highs right there. So same thing. No one owns the stock that's you know, above this price. So if it breaks through here, this is a great place to enter it. So this is where I tried to get in. I got in I don't know, too late, and I got stopped out. So it doesn't matter. But my point being is I probably got in I don't know, way too high and pulled right back, and I didn't get my stop loss in. But you get the idea. That's why I'm trying to get in on this thing, on that move. You know, very interested in when something's hitting this, especially if it's like a 52-week high. I mean, you can zoom in. So like I said, we can go to the hourly chart, and even on here, I mean, you can see it. You can see it really well. The volume's huge, and actually on the hourly chart, that might be a lot. That might actually allow you to appreciate that initial breakout a little bit more. Now this is kind of a slower move throughout this part, but you can see how well it follows these moving averages. And that's really key with a lot of this stuff is watching stuff ride the moving averages. You'll see if you start watching charts like this that you can see how much institutions take into account moving averages. I tend to use exponential moving averages on the faster charts, like the daily stuff, intraday. And really, the intraday stuff, it's not used like you're trying to day trade. It's used to catch a breakout properly. Like I said, on this 5-minute intraday, you want to catch it when it broke this opening range. Well, I guess technically this is your opening range high. Sorry, I'm saying this wrong. See, this is why I gotta slow it down and just. So this would be my opening range high. So this one would suck because you'd buy in somewhere in here and you get really. I mean, that's why I said you get stop lossed out. But you could wait in the day going over here somewhere. There's something to say to kind of the morning is so volatile sometimes. You know, stuff. You know, I tend not to even set my stop losses sometimes in the morning. And I was actually talking to other people on a forum, and you know, a lot of them were recommending that you don't set that stop loss that next day. Normally, you're supposed to set it at break even. So you'll sell some of your stock after you gain a profit, and then you lock it in at break even. So at that point, I'll sell anytime the stock pulls back to my break even point. But you don't always want to do it right in the morning because you could get stopped right out, and then the stock goes right back up. Just because people are selling in the morning, people tend to sell early, and you know, most people aren't selling midday unless something like crazy happens. It's usually in the morning or at night. So either way, once again, stock breaks out here, and this is where you'd want to get in, and then you'd be safe for the rest of the day. It would never pull back enough that you wouldn't get in. This is a really fast moving stock too, so you know, the hourly is not as appreciable. But now I'm just curious. Okay, it did have a giant drop off. So I mean, you know, you zoom back enough, but most of the people who were in here have already taken this loss. I mean, you can see what the volume here was, 140 million on this week here. So that's probably almost the entire, I don't know how many shares this has. And these are all things you should be taking into consideration when you're thinking about volume and this kind of stuff. Let's see here. Shares outstanding, 71 million. So it traded double its amount of shares that day. And I'm assuming there wasn't a reverse split or something. I don't know, but I'm just saying, you get my idea. If you see that, you can tell everyone's sold out of this thing, and now it's all new buyers down here, and these are all people who have been holding this entire time. So that's why when you see this breakout occur here, you can see what the supply and demand does to the actual price of the stock. And once again, talking moving averages, right? So you wondered where do people set these things? Like, look at institutionally, this is my, what is that, the red one, 100-day moving average. It touches it and people have their sell orders there. So respecting moving averages, I'm just telling you, in terms of institutions, people use it all the time. You'll see it on almost every chart. I mean, you can see how well it follows the 20 and the 10-day moving average, and when it breaks out, and when you can use it, when you shouldn't use it. If it doesn't respect it, that's usually a poor sign, at least in terms of this strategy. There's a ton of different swing trading and day trading strategies and stuff like that. So if you're learning a different strategy, literally you can listen to what I'm saying, but don't use it in anything you like. One thing I've learned is that I take bits and pieces of knowledge from all kinds of different traders, but you realize that you pick a style and you have to stick to it, and you have to really work on that one setup. Once you get that one working, then you can delve into other things. But at first, just find one and get it to work, because if you're doing a little bit of this and a little bit of that, you end up just all over the place and everything's confusing. It doesn't help you at all. You have to narrow down all your parameters and what you're looking for specifically when you're going to buy something. But back to the dashboard. One of the things I want to start doing, and I probably won't get much time tonight, is I'm almost thinking of adding another column on these. And reason I say that is because, like, yeah, it's great to see how much it moved in a day and to catch my eye, like, okay, Coco's moving, cloud computer's moving, blah blah blah. But I want to add a column in here that is how much it's moved over, I don't know, maybe the last 3 months or a year or something, maybe half a year I'll put in here, just to give you an idea what sectors are hot. Because if a sector's hot, I mean, it's usually like just every stock will move in that sector. Like last time, it was right before the stream kind of ended, that we had that China sector explosion, especially the internet companies. And when you get one of those type of things, like, you want to be looking at those stocks. They're all going to be moving. They're all going to break out. And a lot of times on those ones, as opposed to really trying to follow the rules for the long-term breakout strategy, you can buy a lot of those, and it's more of like the they call it the pivot or the episodic pivot, which usually has to do with earnings or something, or a big narrative change for like biotechs, like a trial data came out or something good like that. But a sector that's doing really well, that can be its own thing. Like, that could be oils, for some reason going up. So every oil stock's going up. So then you want to be looking at those. You want to see who's the leaders, who's going to benefit the most. If any of those have been in a good consolidation, those are immediate candidates to throw on your watch list. So the big thing is building out your watch list to kind of keep an eye on things. And it's not so much like I'm setting alerts for all these things, but you get used to the same like names that you're seeing all the time, and then it's just a matter of time. Like, in the morning when I check to see what's moving, I'll be like, that's one of the names I've been watching for forever. And I do have stop losses or watch lists on my phone and stuff like that. So there's a bunch of different things I'm working on to try and make sure that I am catching as many things as I can be. So, like I said, I want to be able to pull up like Coco, like, okay, Coco, and see, like, during this move, during this, any stock that's involved in here, I want to be checking, and Coco's a commodity, so it's not really a great example of, I guess I should go to more like a sector, per se. So like an industry, so let's see what cloud computers do. So, I mean, it's kind of choppy. It's, but it breaks out at this range here. Maybe that's going to mean anything that's in this ETF. You probably look up a list of these stocks and go through them and just see which ones are leading. And like I said, it's not that hard. You're looking at the top, few percent of stocks in that. And then from those, you're looking for anything that hasn't quite popped yet, or popped and pulled back, and we're just kind of in that mid phase. Because, if this is weekly, yeah, this is weekly. So for instance, on this week here, everything pulled back. So you're going to see that on a lot of those charts, that 5 days where stuff pulled back and once again breaks out. So from there, you can hop back in. And the other big thing you want to look for during that consolidation phase is really low volume. No one's looking at it. And it's funny because all these things, like I said, I kind of was talking about this before I've taken my little hiatus here. But the same thing in terms of like stuff that works for deep value, it works in trading too. So for instance, like a lot of people are like, I look at the stock like Burry, he always says like, I look at the stocks that no one's looking at, like super low volume. And the reason why that works is because it's the same thing. Like, if there becomes demand all of a sudden on any of these things, You know, there's no one's like looking at it right there, so the stock will pop. So whether you're looking at a chart or you're looking at the fundamentals and you're using just some basic ground rules on why you want to get into things, it all is working in the same tandem. And like I said, all the great traders, they all look at fundamentals. Now, they might not delve into the stuff like you would as a fundamental analyst, but at the same time too, I've looked back at the fundamentals and I realized that like for a bunch of stuff, it's lagging. It's all lagging. You're not going to find information. It's not going to show you in the right direction. The real way to do it that I've learned is you got to go through the 10Ks and 10Qs and read and see what management's saying, and then you got to believe in the thesis. But I found that this is a little easier for me to follow and keep track of. I guess I'm more of a numbers guy than a narrative guy, so I kind of I'm appreciating the trading side of things. But it's always nice to hop back and just kind of look at the story in the business itself. But I will say, it's like I said, it's kind of in reverse. The chart leads me to interesting things. Once I'm in it, now I'm looking at the fundamentals and stuff to see, you know, how much room does this have to go? Should I be trimming this really quick? Should I be holding this for a long time? Should I expect to use a 10-day moving average to sell out? Or if it's like for instance, place. If we pull that up, right? Now this one popped on this, right? So this is another one that would have been really hard to catch based on, you know, my style initially. But initially I tried to get in on this big breakout day. Now this was really an episodic pivot, so you could do it on this one. Episodic pivots, if you're going to do it, you want a huge gap in the morning and you want massive volume. So, you know, typical volume for this stock, some days, on big days, you'd see like 10 million, but usually it's around like, you know, a million or less. And then one day you get like 60 million. That should throw every, you know, thing at you. That should just warn you immediately. And I remember that day watching this stock when it first opened, and I remember like thinking, oh my god, this thing, like, how is this up so much, like so fast? And it had a huge revenue beat, new guidance, and it kind of reshapes the whole thing. And then everybody buys in based on that guidance, you know, kind of makes a quick assessment. And then you can just see, like, okay, everyone's kind of holding in here. Some people are getting out because they're like, I don't think it's got any room to it. Other people are, you know, longer term investors, so they're holding. And this kind of becomes its new range. So here, you know, if I was following this as a big time, you know, as my chart here, you know, this is kind of the range here. It pulled back into somewhere in here. You could probably even do this, and you're going to want to see this tighten for longer. This, I mean, it could break out, but you know, volume is back to really low now. But you know, I guess you could say that the range is getting closer to where this is, but usually is a little clearer than this. But I would say if it breaks somewhere, you know, above this range, then it's super interesting, because this immediately becomes a candidate. So those are kind of the things I'm looking at. I'm looking for the consolidation. I want more consolidation. I've learned the ones that have that really thin consolidation on the chart, those are the ones that really take off. This one's still, people are kind of in and out of things. People are still selling, essentially. So you really want people just to be all out buying. In terms of, you know, the acquiring versus the distribution. So that's kind of what I've been looking for. And I guess this is where you call it a high tight flag or a wedge. I don't even know the names. I really don't care. You know, people call them whatever they want, but it doesn't matter. But place is a good example of maybe a possible breakout coming in the future. So those are the two that kind of things I'm focusing on. You know, like I said, so one of the things I'll do at nighttime and also in the morning is I have just TradingView. I like TradingView because it's free. It's good reason I like it. But has it kind of set up here. So for instance, after hour gainers. So you can go here and I can just scroll through these. A lot of times you can kind of throw these out, like market cap 4.5 million. I'm not looking at that. I don't care if it's up 40%. I don't care if it's up 150%. I'm not looking at it. And then also the volume, because that's the other thing too, is like, okay, post-market volume, like this is up 15,000 shares. Like, okay, someone is either trying to pump it or is an idiot and bump this price up 30% on 15,000 shares. So those are the things. And like you'll notice a lot of these, you know, 5 million, 7 million, 5 million, 5 million. Like I'm not looking at any of those market caps. Tonic, which, you know, close wise is at 24 cents. There's that immediately throws red flags. It's too risky to me. So like I said, there's a lot of things I've learned that, like, as I scroll through here, just skipping over a lot of that stuff. But this will lead you to, okay, this one looks like it kind of fits my criteria. Let's see what's going on news wise. And like I said, you're looking for something that really outperforms. So you're looking for, you know, a surprise revenue gain of like 50 to 100% or more, which doesn't happen often. So it's not like these things happen often, but you want to catch them as often as you can, because every time you catch one, you know, it can be a huge return on the portfolio in a super short amount of time. I mean, we're talking like a week, which is obviously the goal here. So that's one thing I do. And there's not many. You know, it doesn't take too long to do it. And then the same thing in the morning. You can kind of look at the gainers. You can't always go off it. And to be honest, the ones that are up this much, technically the way you're supposed to risk that is if it's up like this much and I'm trying to keep my stop loss at like 3% or like, you know, like let's say 0.5% of the portfolio. Well, then I have to limit the amount I can buy. So then I'm going to drop my actual position size down to, I don't know, like let's say I normally take like a 10% position size. That's been pretty routine for me. Well, maybe I'll only take like a 3% position size, and I'll cut all that risk in a third. And then this one, even though it's super volatile moving, now I didn't do that in ACRS, so that's me learning and saying like really focus on that. If it's really moving and you're going to take a shot at it, it's okay, but definitely cut that position size down, because that's the only way you can really control that. And now it kind of stinks because you're putting money into something, and it's now there's a potential it could go up 100%, but it's also a smaller position size in general. So I don't know. I'm going back and forth if I even want to focus on it. Which today, for instance, we'll just go to my portfolio here. And sorry guys, I really can't go too long, so I'm just going to go a little bit. But I did want to kind of just catch people up on what I'm doing, and because I mean I find it interesting. And it's tough. Don't get me wrong. It is super tough. I've made so many mistakes, and there's so many times. What am I up now? I'm up 13%, which I think before I was up like 16% before this whole thing. At my best, I was up like 20 something percent, like 20, I think it was like 26% maybe. And now I'm back down to 13. So I've literally lost half of all that. So don't get me wrong. You have ups and downs in this, and controlling stop losses or just your losses in general, and making sure you really let your winners go. It's super important to really focus on the numbers, and to just basically keep watching. Like if I would have done this, I have another spreadsheet I've created, but has a lot of my personal information on it, and so I'm not going to show it on the stream. But just to give you an idea, I basically list every time I buy something, every time I sell something, how it performed over the next 5 days, how it performed if I waited for the 10-day moving average, what was the news that day that caused it on the initial breakout, where did I purchase it, was it on the first day of a breakout, was it later on in a breakout, what lag of it, is it the first up wet lag of a move, second, what kind of chart was it choppy, was it really smooth, is it a 52-week high, and it changes. I watch something, I test something a bunch, and I'm serious. Every position I do, I look at every trade now, and it really provides like a ridiculous amount of like insight into what you're doing wrong and what you're doing right. And and then also too, like I've been calculating. Let's say I did everything perfectly, what would be my return? Because you want to know, is this just successful even at a base level? And then if it is perfect, if I was perfect, how close could I get to that, essentially, is my goal. And then also I'm keeping track each week of, okay, how did you do this week versus last week? What did you do different this week than last week? So just that's kind of what that whole spreadsheet's become. But anyways, so this is the current portfolio. This is up to date. So like I said, today was a much better day. I think yesterday I was down. I bet I was down almost 1.5%. So today, to be up 1.2, I was like a 3% day for me for the portfolio. So it was a good day. And you can see, I mean, everything was green today, and I had some huge movers. I got in on some of these names pretty early. So just happened to work out nicely for me. And then just to go to my portfolio, so I have this one here with all my different stuff in it. So I can kind of show you just the different things I've been looking at, and you'll see, you're going to see the same kind of patterns that I've been looking at over and over again. And now they're not all exactly the same, but it's close enough. You'll see I took MACD off. I go back and forth. I kind of liked having MACD. It shows you where in a move you are, but at the same time too, it didn't provide enough information to me. The stochastics I ended up getting rid of because I just could not find any good way of using the stochastic only in hindsight. It's great maybe in terms of selling, like it's good for finding tops, but I feel like you can, I just seeing the chart now, I can kind of see it happening anyways. But anyways, so this one had this first move up. And, you know, it is a choppy one, so this one's tough, which is why I kind of waited. So if we just zoom in on this one, just so I can annotate here. So you know, we're kind of, if we're using that section here, and then this is kind of like the lower highs, you know, somewhere in here. I don't know. I guess we can go maybe off that one. But you can kind of see it's just in this like parallel range here, and then it breaks out on this day here. So, and really this was kind of, I mean, this is really like a line of support there, that 52-week high somewhere in there. So the goal was to get in once it broke above that 52-week high, and then, you know, it did pull back, but once again, because I had gotten in close enough to it, don't get stop lossed out, and then it continues to break out. And like I said, you sell into strength, so you'll sell on some of these days. The bigger pullback days, you don't do much. And then, like I said, you set your break loss, or my break even point. So as soon as I sell some shares, then I'm trying to set my break even point so I'll never lose money on that trade. That trade will always be positive. And then from there you follow it. And like I said, then it's how close you want to use a 10-day moving average, depending on what the news is, maybe a 20-day moving average. But let's back out of this one. Butterfly is one of the ones I bought today. This one seemed pretty clean to me. It is the third leg of the move, so hopefully it's got some strength to it. But once again, popped up, moved sideways for a little bit. You can see it started running along those moving averages before it popped here. I believe I tried to get in on this somewhere and I got stopped out or something. I didn't. Either that, or I remember looking at it and it was too high in the day and I didn't get in. There's some reason I did see it, because that's part of the reason today I had it on my list to watch. I did see this, but it had this other move sideways, and then this was enough of a break today to give me confidence to buy this one. And like I said, we're at 52-week high too. So usually a strong move, pretty good volume. It's not as big as some of the other days here, but still, just everything's in general just moving in the right direction. CANG. When did I buy CANG? CANG was either on this day here or this gap up. I don't think it was the gap up. I think I bought CANG here. No, it had to have been the gap up, because I'm not up all that much on CANG. So another one, you know, this would have been, it didn't have a ton of days, it moved sideways here, so this breakout's harder to catch, and you could get stop lossed out on this one. And the stop loss is what it is. If you get stopped out on something, it's okay. Now this one, like I said, if you had bought here and you sold some shares on any of these days here and set your break-even point, still a positive trade. And then the next day it breaks out here. Now, yeah, it sucks you didn't hold through this, but the whole idea is just to continue to keep getting winners, as many as you can. I don't care if it's 1% or 100%. It's to keep those to out you know, supply any of the 3% stop losses that you get, or whatever you want to set it at. You know, Kalamaji uses low of the days. A lot of people use low of the day. I do use low of the day, but I also tend to kind of watch for things that haven't moved that much yet. That, you know, it looks like they're going to move. They got a lot of volume in the morning, and they're already trending into new territory. That's kind of where I start to get interested in things. But anyways, and then, you know, like I said, massive volume, but I got in, I swear I got in somewhere down here, because this is still positive for me. So even though this was a gap up day, somehow I got in at a decent spot on this. I probably used the opening range high to get in the low of the day, so I didn't get stopped out. Which is, anytime there's a big gap up, it's kind of hard to use the stop loss, because it's going to be moving all over the place. And if you set a 3% stop loss, you're going to get stopped out, almost guaranteed. So low of the day is the best way to do these ones. And if you get stopped out, you just have to assess if it's the risk in even going in the first place. Depends on how much it's up on. And you can look at your ATR. I do have a calculation for ADR. I don't use like trading or TC2000, I think is what Kalamaji uses. And that one's nice because you can set all these parameters. ADR is basically just the previous, or he uses it for the previous 20 days. It's your highs divided by your lows, and you take the average of those, and then you're looking for stocks that are trending that on average they're moving at least 5%. It's volatile enough. You could use beta, whatever. You can use ATR, which ATR as opposed to a percentage is a just the price. It's a price amount. So 33 cents would be your ATR for this stock. So you buy in here and then you set your stop loss, and as long as it's less than that 30 cents, that means it's considered a safe enough buy, because it shouldn't move below that based on what the average of the move is going into that move. Now obviously you're hoping it breaks to the upside, but either way. So this one got in here, and I've been selling shares, so this is already profitable, even though it's dropped back down. Now this one touched the 10-day moving average, but I've learned if it touches it, I don't always sell just on that. End of the day, right at it. It was within like a penny. So to me, it's like it's not really way below my stop loss. Now that could screw me because the next day it could drop even more, and then whatever. But if I woke up the next day and it was down, I just sell it. It's fine. It's not the end of the world. But today, kind of rose back up with that stop 10-day moving average. Now it's still shy of it, about 3 cents. But this also is where you could see it pop again. So it's like I said, it's kind of balancing that risk of I already got profit on this trade. As of now, hopefully it just doesn't tank. If it does, well, yeah. What was CANG doing? I'm sitting here saying all this. This is what is doing the after hours. It's up. Okay, good. so hopefully tomorrow that holds, and then I don't get screwed in the morning saying all this, telling you, And this is the thing I'm learning. This is what I'm practicing. I'm not saying that it's right or wrong to do anything. I'm saying, hey, every time it's closed, it ends right there. Now, if it had ended the day even probably like 5 cents, 10 cents down, I'm gonna sell. I won't take the loss. Then I'll just sell, and I'll consider that a profitable trade. And I've been working on how much to sell, how often to sell. I think Kwalamaji always says 3 to 5 days, and he sells like a third to 50%. I like to sell some no matter what at the end of the first day. I always sell if it's up, because it's nice to lock it in, and then from that point on, I set my break-even point, and every time that's a profitable trade now. Now, like I said, sometimes you got to be careful, because if you set that break-even stop loss the next morning too early, you can get these pullbacks. Like for instance, let's say you bought on this day, and then you could have got stopped out here. So you kind of this one's tough because this isn't a great example. But let's say for some reason you bought on this day here. This day you wouldn't have got stop lossed on, and then you wouldn't have missed this entire move here all the way up to here. So a little late on this one. Obviously this is technically a breakout here. So this is a good one to talk about more long term. So if we look at CANG here, this is your first breakout way back here, way back in February. And then from here, the stock has really just kind of been moving sideways. And, this is kind of your range here. And then you can see it's kind of starting to pull, into this range. And then somewhere from here, this is the next high. I guess we could argue it's consolidating somewhere like this. And this is where it starts to get tight. And then on this day, as it breaks through, this should be your warning that, hey, this stock is now breaking into new territory. This should throw every red flag. And you should be checking what's the news on it, was there earnings, why is this popping on all that volume. Now, I'm not saying you're going to even find something. Sometimes it just happens. But it gives you more confidence no matter what, if you kind of have an idea here. And then from there, look, you would have got in somewhere like around $2, and it already would have been a double for you in the course of about 2 weeks. A week or so. And I'm not saying you're going to capture that entire move, because like I said, you're selling some right into that first part. But either way, and that's another thing too. I do sell a little bit on the first day. In the long run, is that really hurting me? Because for every one of these that run, and I should have just held it all the way through. But it's tough to say, because for every one that you get, there's stop losses and stuff that you're like, oh, I should have just taken some profit off there. This wouldn't have been a negative trade. So it's give and take. But that's another thing I'll be measuring in my patterns spreadsheet is, on these ones, if I had just held more often, would that have been more profitable? If was it smarter for me to sell no matter what on those days, and then just to keep the losses low? Because the thing is, if one of them's going to move, it's just going to move. Like this one doesn't even pull back on that second day. It literally opens up at almost the same price and then just takes off. which is why I said, you know, a lot of these times in the morning, like this technically looked like it was going to be down at the start of the day, and then it goes right back past the area, and it just blows right through it on heavy volume. So just little things that you learn after you watch it a million times. CDCX, this one was another very easy one to me. Once again, looking at the yearly chart here, moved sideways a lot. I got in on this one at like 440 or something, so this one's been great. Took profit, and I'm still holding it, and the moving average continues to move up, so this one's just my long hold now, and hopefully this keeps going. Keep going. Let's see if we can push to the next leg, which I would imagine if this went from like $1.80 to up to $4 range. You know, if this has another breakout, let's see where it can get us. And you know, even if you're only holding 30% still in a position, it's still awesome. Like that all outweighs all the stop losses that you're taking on some of these other ones. Despergar, I bought this one on the gap up here, and luckily I got in early. I didn't get stopped out today or yesterday, and it's kind of moved back up to where it ended on the first day. So just holding this one, seeing if it can do anything. It's a pretty choppy chart, so this not really like a great setup, but going into it, you kind of knew that. That's the one thing too, is stocks tend to move in the same way. So they say stocks have a personality to them. This is what they kind of mean, is like if you look at this one, like, you know, it's choppy. This whole move here, it tends to move in much more of a pattern, kind of like this, you know, and then has its big pullback, and then once again it's kind of choppy here, and you know, somewhere in this range here, and then you know, it snaps above the range there. So like these are the things I'm looking for, not rocket science. You know, it's just timing it and making sure you really do the math to make sure that you're not getting screwed on your entrances and exits, and as long as you appreciate like what's going on in terms of supply and demand, you know, heavy volume, those kind of things. You know, super bearish signal is if you ever see one of these candles here, like this is massive volume except nothing happened price wise, that is a red flag. I don't care if it comes up the next day. What that's telling you is someone just got out a lot of shares. Someone bought a lot of shares here and they lost a lot of money, because this all coming down here was from someone getting out on that day. So this is all, even though it's a positive, it's a lot of buyers, it's because someone was feeding them shares to get out of their position. So anytime you see that, I don't care if you believe in technical analysis at all, do not get into a stock that just did that and didn't move. I can tell you if you want to short positions, that's a great sign. That's been one of the most consistent signs I've seen, and I do not recommend shorting. But what else we got here? Geo, I got it. Oh, come on. Whatever, just clicked on it. Geo, I missed this initial move. It was when Trump got in, and oh yeah, I mean, we got a new president here. There's like so much going on in this. It's ridiculous. I'm not getting into that. But anyways, you know, once again, just broke through new highs. I remember Geo when it was trading at like $5. I remember I was looking at this one right after the whole GameStop thing, way back in the day, because Burry owned it, and that's what got my eye interested in it. Terrible business. These guys basically are for-profit prisons. It's such a terrible business. But either way, I'm sorry, I also own it. So, and you know, it's not like I'm owning it because I love the business. I'm owning it because I'm just trying to swing trade this. But either way, I had another breakout today. I don't know. Is there enough volume here for this to go up a next leg? I don't know. But that moving average here, it caught up very quickly, which we'll see. We'll see if it has any legs to it here. And like I said, already sold on this, so this will be a break-even trade no matter what. So that's the goal, is on these ones too. The nice thing about these popping above these like kind of highs here is that once you lock in some return, it's just going to be a break-even trade, even if it doesn't work out. I mean, I won't get much. It'll be like maybe even only 0.5% gain, you know, on the entire position in terms of my portfolio. But I'll take 0.5% gains or something like that, or whatever it is. You know, it's small. It's small is my point, but it's not a loss. What else? Grab, this is another one today. It kind of looks like it was day 2 of the breakout here, because this is technically where it broke out there. But this one's real stair-steppy. I mean, moved up, or moved up, moved sideways, moved up, moved sideways, moved up. So we'll see. I mean, that's like I said, I'm not doing anything crazy here with what I'm looking at. You know, and hopefully in hindsight, you know, get in on this move. Now you would get stop lossed out on this one if you're using the 10-day moving average, but the 20 you'd still be in. So that's one thing I want to work on going into the futures, is trying to determine when the 20-day moving average is better to use versus using the 10-day, because most of the time the 10-day seems to be the better moving average. Very rarely, and it's got to be a really heavy mover. I'm wondering that, like here the volume looks great. I don't know how you would have seen that here. You know, you can't predict these things. You know, remember, it's easy to see the chart now and in hindsight think these things, and that's one of the big tricks of this is, and that's why you have to really follow the consolidation pattern, because when it breaks out of that consolidation range, that's where you know that it's a real breakout. And I've tried it to purchase before the breakout, and that's really tough. I don't recommend it, because you kind of need that real official signal, like it is breaking out. You know, there's now we're in buying territory, everyone's buying, and that's where you can get, and you can see it works. I mean, you can see these are numerous examples. Now don't get me wrong, I can pull up 1,000 charts where it fails. So for every one of these I'm showing you right now, these are my successes, because that's the only thing that stays in the portfolio. So there was ones that looked like they were good and didn't work, but I'm honing down on making sure that I'm really picking the more solid charts. And if you work really hard on your setups, that's really the trick. I mean, you know, this one in terms of the pop here, you could argue that this low volume here, this should be screaming red flags when you get this low volume here, and then you get this green candle here that broke above the 20-day moving average. That would be screaming to me to watch this one, because we had super low volume. Now it's starting to pick back up, and then you get the huge breakout. And this was after this first initial move here, which also puts it at a new 52-week high. Hood's kind of a slower moving one, but in general, I just like the overall trend. You know, I don't like Robinhood. This is another one. I guess you know, some of these businesses, but they've been doing well. They've been keeping up with things. The stock's been moving higher. Smaller breakout, but this one's not super clean. Like this one, the slower moving one, like this is a good example. It's a real slow mover. That 20-day moving average has a lot of time to catch up to things, and because of that, if you wait to use your stop loss on that, you're probably going to get killed on that. So, you know, when this starts to get down to the 10-day moving average, now this one taps it there, and once again I said, you know, if it's real close, I see a lot of examples, taps it there and doesn't break through. Now this day here, you can see it broke down. It did rise it back up, but you know, finally breaks down right there, and it's almost at the 20-day moving average here. So no matter what, this would be your get out date here, and hopefully you've trimmed throughout this somewhere in here, and then captured most of that move. So this one, I would not be following my 20-day. You know, like I said, you want the real pop parabolic ones. That's where maybe you know, this one moved, you know, from here at $3 to we're almost at 6 now. This is one where probably the 20-day moving average is maybe reasonable to follow, for a chunk of your position, that is. Lemonade's another one. This was another one I bought today. Just a ton of volume, high tight flag. I guess you know, looking at this in hindsight, I didn't have this one on a watch list today. I literally saw this one and I just pulled up the chart and I liked it, so I bought it. But I would argue somewhere in here, this is somewhat of a range here. So when it starts to break through on one of these days, you could have got in on this little gap up here, because this is a big pullback. So I wouldn't really say that this follows the perfectly. I mean, I guess you could call this a move over, and then it leads up here, and then this is kind of a sideways. Now it's not much to go off of, so it's tough. It would be a tough one to play. But see, I saw this, and then I saw this consolidation here. So when it broke out here in the morning, that's what signaled to me that it was going to break out. And once again, 10 days following this one pretty steadily. So and 20's pretty far behind it. So I don't know. It's tough. Like I said, I haven't had enough time testing these things because I've only been doing it for. My pattern sheets only goes back like almost a month now, about a month now. So I'm just starting to get ones that are crossing their 10-day moving averages and then 20-day moving averages from when I bought. So that'll continue to give me feedback on which ones would have been worth sticking with, and then I'll just have to see statistically, does it make sense to stay in stocks for that long or not, you know. But for instance, you want to pull up a stock like you know, one of the things that I'm trying to look at is, for instance, something like Root. Now Root was a excellent example of getting in on these things. Root has just been a massive returner. I mean, it's just insane what the stock did. So, you know, somewhere in here, this would be your first move up and move over. Now, I'm not saying you're going to get in on this opening day, but you might be able to, because like I said, once again, there's now we can go back further on the chart. Let's just to clarify. Let's do 2 years here. So I mean, you can see this is oh, so actually, I guess if you had been looking at this at the time, you actually would have saw this. So because here's our first move up. So move up from like $5 here. This is such a great example of why this would work. So here's your first move up. Now here sets your new move on this breakout here, which was on ridiculous revenue growth. I was like they like shattered revenue growth on this, and it was a small, you know, cap at the time, so not a lot of interest at first. But and then just look at this run it does. I mean, it's just insane. And even if you follow like the 10-day on this, I mean, you're getting out, you're buying at 10 and you're getting out at like 85 on the first move. And then once again, it fails to break out on this one. And then we're back down into this area. It does break out here, and now we look at like we're at the next leg of this one. Now Root's a little high for me. You'll notice, now don't get me wrong, stocks that hit $100 can go to $200, can go to $400, can go to $800. It just gets harder. You know, all of a sudden you have to start looking at the business. What's the TAM? You know, how much of the market can it take? And that's why I said, if you're a fundamental investor, you would know that. Now, as a trader, you might be like, oh, it's going to keep going higher here. Well, and maybe it will. I haven't done the numbers myself, but I was, you know, if I was going to, I'd want to look into that. I'd want to say, you know, right now it's at $100, which means it's valued somewhere around here. So let's say the total addressable market, it could go up by another 30%. Well, if it go up by another 30%, you know, it probably can. The chart is always going to go higher than it should in terms of value. It always beats out the value, but it will pull back to the value. You know, as they always say, the value is the weighing machine. In the meantime, it's just a voting machine. So it'll go above that because you got a bunch of people who just buy on growth. And then as soon as the next earnings or revenues come out and they're not at that extreme level, it all sells way back, because it's just, growth investors aren't scared to go heavy into something, even if it just doesn't make sense mathematically. They don't care. It's not how they invest. Our goal is to take advantage of that. So anyways, this is a good example of one where, and like I said, these things can take a long time. If you build a watch list, you know, this could have popped here in June. I'm like, ooh, this is a good looking one, and I don't get to touch it until next March. You know, that's a long time, but that's why it's not such a rush. And then I do got to get going here. So one last point I just want to touch on, and I hope people find this helpful. I know this has typically been fundamentals, and I know this has really been a lot of technical analysis. Don't get me wrong, still got the fundamental page. Everything's still here, still using it. Just there's been a lot of other considerations I've taken into place now that I'm using the swing trading style. But using this on top of you know, let me see if I can go like this. Let's do just, I guess, SPY. And the idea here would be to compare these two. So, can I shrink this down? Okay. Oh my God, get out of here. All right, so and then let me change this back to 1 year. So normally, I mean, I have multiple screens here, even though you can't see that. So the idea here too is to compare these things over the last year and see how much correlation is done between these two. Because no matter what, if the overall market's moving as well, like let's say the market moves up 5%. Now, if I'm looking at another stock, it's not as interesting to me if that stock moved up 5% as well, because that means it's just moving with the market. Now, and I know this is the S&P 500, so it's not perfect because this is large cap, but let's say I was just looking at, you know, like NASDAQ just in general, like a composite of everything. If you are using that, now you can see in March we were in a relatively bull period. So one thing also to take into consideration is, you know, if you're going to be doing a swing trading style, like this here, this is a good section to be swing trading. This here, this is not a good section to be swing trading because it's a pullback in the market. You know, same thing. This here, this is a good section to be swing trading. This here, not a good section to be swing trading. So there's going to be times too where this strategy where I probably won't buy anything. And if I do, I might even be selling at the end of the day, like the entire position, or I don't know, I'll have to, when I'm in a pullback period, because I really haven't had too much of one. I mean, I guess you could argue we had a little pullback here the past few days. But during those, you know, the breakouts aren't going to work as much. So you're just, you have to think of it like blackjack, you know. If you ever hear people who count cards, you know, they wait until the deck's kind of stacked in their favors where the dealers are going to bust, and then you have a higher chance of winning. So that's when you should be gambling. That's when you should be putting money on the table and increase your position sizes, you know, really try and take advantage of those bullish periods where everyone's making money. And then these dropbacks, the statistics are working against you. People are selling more often than buying. Breakouts are going to fail constantly. You're going to get stop lost out a lot. So during those periods, you kind of just sit, do your math, do your homework, start really building up watch lists, and also really delve into the fundamentals. Start learning those businesses that are in those watch lists. So then you're really confident of when there's a breakout, you know exactly which ones you want to buy and which ones you're going to be really excited about to build. Because, like I said, you're trying to limit your risk by taking such a certain position size. So if that's the case, that's great. But let's say company A versus company B. I love the fundamentals of company A. Revenues have been killing it. Let's say even though the market's pulled back, that stock's, you know, pulled down a little bit, but it's been moving sideways, which means it's not even working in coordination with the market. When the market turns around there, that's where you're going to get big breakouts. That's where you're going to get big returns. And I mean that should be all kind of common sense too. But you know, I think it's good to see from the trader's perspective what you're thinking at, especially as a term of a swing trader. Was there? I think that was the portfolio. Like I said, I guess I'm technically up for the month, so I guess I should be kind of happy with that. But yeah. And that was the other thing too. I mean, you guys weren't. I wasn't streaming. Not you guys weren't here. I wasn't here. But I got smoked. I had that China run, and then like the next 2 weeks, I must have bought everything and did everything wrong that you could have. You know, and I hadn't really thought about the math side of it, which is, you know, my bad. That's dumb. But you know, I had huge stop losses in comparison to what I should have had them at. The position sizes were too large. And you know, you get excited because you know, I was doing well before, and I'm like, man, I should have bumped up these. You know, I'm thinking in terms of profit, and then you should anticipate. You know, if you had just made a lot of money, most likely, statistically, you have losses coming. So you know, if you have a few wins, don't get crazy. Take some money off the table and start to slow things down, because it runs hot for a while, and then as soon as you start to see, you know, okay, you know, the past like 2 or 3 days, everything I buy just stops breaking out. All right, we'll start slowing things down and just kind of reflect on what I didn't do that, and I lost that entire basic trade there. So I guess I should be happy. I'm back up slightly, and like I said, you know, yesterday was a bad day for me too. I would have been up a lot more, but every day is a learning experience, and now I actually have a bunch of positions in here that have turned into break-even positions. So these are either waiting for moving averages to sell out, or they're already at break-even. So these are all positive trades. And I mean, what is that? That's 63%, almost exactly. So I literally have third or 2/3 of my cash already in positions. So you know, try to take maybe anywhere from 1 to 2, 3. Today I bought 4 different trades, just because stuff got meeting my criteria of kind of what I'm looking for, and each one worked out too. So I guess I can't be disappointed with that. I didn't get stopped out of anything. And then like 4 positions, kind of a lot in one day, but you never know. I mean, I guess certain days things are moving, and if it all looks good, and that's the other thing kind of like about selling on that first day is you get some cash back right away as well. So if there's the next day, there's always one more position I could take, because the whole goal is you're trying not to miss. You don't want to miss a big mover. It sucks. You look back and you're like, oh, like that one I missed. Like, you don't want to miss any of them. And I know that sounds crazy, but like I said, if there's 5,000 stocks I can basically be looking at, and I focus on, it's got to have a certain amount of volume. It's got to have a certain amount of return over the past any given period of time. So it narrows it down very quickly. And if I'm only looking at 50 to 100 stocks, that's like let's say that's how big your watch list gets. Well, at any given time, probably only a few of them look like they're close to breaking out. Let's say maybe 20 of them at any given point. So now I'm focused down on 20. And then of those 20 on any given day, maybe like 4 to 5 of those look like they're close to breaking out, or are slowly breaking out. So it sounds like there's a lot, but really you're narrowing the market down to very few stocks that are really fitting a specific criteria, and you're focusing on the ones that should be the best returners. I mean, you'll see. Look at my 52-week highs here. The 52-week highs are all like super close to their high, so you could tell. Obviously, I take that highly into consideration now, how close it is to that. Just because, like I said, you don't have to worry about the sellers. There's no one selling at that point, really. I mean, there are sellers because obviously you're buying, but no one's selling to get out of the position. They're selling it because it's a profit for them, so they're excited. And all the buyers are fresh. It's all new buyers. Which also helps to lead to the next leg of it. If all of us are brand new buyers, well, we're all just getting into it now, so we're all looking at kind of the long term and hoping to see where it goes from there. And this is other thing too is I used to try and get close to the 52-week lows, and now it's kind of like the farther away from it you are, the more bullish the stock's been. So. Any other things? I will say, I had tried doing this with biotechs and stuff like that, and they are tougher. No matter what, there is certain categories still that are really tough. Biotechs tend to be really choppy. They move in weird ways, and that's the thing too. Is like you'll notice there's just certain things that like you're not going to really buy into certain sectors and stuff like that. But that's my next big thing going into this week and next few weeks or whatever. I want to go through the different sectors and start focusing on what are the top performing sectors, and then looking at stocks more specifically in those sectors, not just the big movers. And then, the more time I have to spend on it, the more I would love to, the companies I like to really start digging into all the 10Ks and 10Qs. But, that was the tough part from before, is I always had a tough time because just finding them, and there were so many times you'd find a company and I'd read through everything, and even the ones that looked good, like nothing would happen. So I just like the idea of the breakouts. It just helps to point me in the right direction a little bit easier. Now, granted, I haven't had the returns yet that have proven that this is a great strategy, but there is people who've made it work, and in my mind, I see it all working. It's just execution. It does work. It does work. There's literally hundreds of case studies of traders who make this work, maybe even thousands. So, and I get it. Most people aren't going to be able to do it. And if you're not really careful on some of these breakouts, you can get smacked. So, it's just focusing on all the little things and just reflecting on all the trades that I make. That's kind of been the big focus. But, all right, guys, I'm going to call it there. Thanks, Bobby, for joining. I don't know if anybody else was in here, but thanks anybody who joined in. Hopefully over the next few days I'll be able to continue to stream. It's gonna be random going forward. I just got so much. It's so busy with two, Oh my gosh, it's a lot of fun, but it's busy. But I should be able to do a stream this weekend with Johnny. So we'll post. Obviously, we'll post if we're going to do one or not. And he's busy too. I know sometimes he can't do it either. So I loved, but for a while we were super consistent. It was nice, but it's just tough. So we will try and put things out there. I'm going to try and keep up on the Discord as well as I can. That might be a little bit easier. I turn notifications on, but I feel like sometimes I still don't get them. I don't know. Anything else? I'm trying to think if there's anything else to say right now. And if you guys have any questions, I'll be happy to answer them. Like I said, because of I have information in my patterns one that's specific to me. I can't show it on the stream. I might be able to go through and edit it and then take stuff out so that I can show it on the stream just so people could see it. I was doing all kinds of calculations on, okay, how much percent would you need to get these kind of returns? Well, it's a nightmare. If you don't like math or reading, don't do this. Don't do this. But we'll see where it goes from here. And on that, everybody have a wonderful night.